In today's video, we will discuss what is daily bias.
Time to trade.
In crypto or forex trading, saying that a currency pair will trade at a particular price at a specified point in time is an example of a prediction. What we will look for on the graph is the following: previous liquidity taken, swing highs, lows, market structure, relative equal highs or lows, market structure shift, imbalances, discount or premium, higher highs, higher lows, lower lows. The first thing I look at is previous liquidity taken. The reason for this being is once we take liquidity or accumulate it, we want to distribute it higher or lower, right? So if we take liquidity down here, we want to distribute it higher. Pick liquidity up here, want to distribute it lower. Next thing I look at is swing highs, swing lows, short term, high short term lows, relative equal highs and lows. Putting those out there, that's just where people are going to have their stops above. So it is important to notice them because that is where liquidity risks. After that, I look for market structure shifts and imbalances. This will show me a change in trend. We have a short-term high put in right here. It breaks it with displacement, and then an imbalance fair value gap put right there. Next thing I look at, just are we at equilibrium, premium or discount? Right. Once we take liquidity here, we want to distribute it at a premium. If we took liquidity right here, we want to distribute that at a discount. Next thing I look at, just lower highs, lower lows. You know, simple swing high, swing lows, just to see where we're turning. So you can see lower high, lower high, lower high, lower low, lower low, lower low. So you can see we're trending down here. However, after this market structure shift, we put in a higher high. So potentially, if we put in a lower low here, we can continue upward. So what does that mean for my daily bias? At the closest imbalances and liquidity, as you can see, I have this super equal high level right here around 4,300. That has been kind of my target since we grabbed the liquidity down here. The thing is, after this market structure shift up, signaling a change in trend, I want to see a move back down a little bit to grab liquidity and move higher. I want to see a move down to grab this liquidity that rests under here, potentially even into this fair value gap before I move higher to take that out on the 1 hour time frame and lower time. I am bearish until this liquidity is grabbed and then back to being bullish here. You could just wait until it's grabbed and then continue bullish. So moving into the 1 hour chart here, you can see we have these relative equal lows here, right? Liquidity is resting under that. That is our target for the week before you know I switch back to being bullish. On larger time frames, I expect liquidity from the lower side to be picked up. So I am bearish until we pick up that liquidity, and then when we pick up liquidity and break away from FVG, then I expect bullish movements of this price. That is, I would look for positions for shorting until we pick up liquidity from the bottom side, and then I would look for longs. The picture shows exactly what I said. So first one could look for entries for risky shorts, and then a slightly safer long can be done. That would be all from today's video. I hope it helped you. Leave a like and subscribe and leave some feedback in the comments.